Good morning, everyone.
Good morning.
Good morning, everyone. Can you hear me?
Yes, we can hear you
Good
from here.
morning,
Good morning.
Ketri. Good morning. We are hearing you.
Okay, good morning, everyone. Good morning. Welcome. Please, if you can hear me, can you make use of the chat box and just send thumbs up? Just let's interact. If you can just react with the chat box. Thank you. Thank you so much. We can see your reactions. Thank you so much. My name is Chinemere Udenka from Sterling Asset Management Trust Limited, Samsu, and I'll be your moderator for this webinar. We are happy to have you here with us today. We appreciate your presence. Please, let's give less than 10 minutes, let's say 5 minutes for others to join in. And while we wait, enjoy this short jingle from Samsu. Thank you.
Teamwork and integrity, building lasting legacies and preserving wealth across generations. Reach us today to grow your wealth. Sterling Asset Management and Trustees Limited, adding value. Over 40 years ago, we began a journey of excellence, innovation and growth. We are Sterling Asset Management and Trustees Limited, SAMTIL. With cutting-edge solutions, SAMTIL delivers value to institutions, corporates, retail investors and HNIs through its subsidiaries, trusteeship, registrar services, stockbroking, asset management and financial advisory. We continue to expand opportunities for our clients. 4 decades on, SAMTIL has remained customer-focused, driven by innovation, professionalism, teamwork and integrity, building lasting legacies and preserving wealth across generations. Reach us today to grow your wealth. Sterling Asset Management and Trustees Limited, adding value. Over 40 years ago, we began a journey of excellence, innovation and growth. We are Sterling Asset Management and Trustees Limited, SAMTIL. With cutting-edge solutions, SAMTIL delivers value to institutions, corporates, retail investors and HNIs through its subsidiaries, trusteeship, registrar services, stockbroking, asset management and financial advisory. We continue to expand opportunities for our clients. 4 decades on, SAMTIL has remained customer-focused, driven by innovation, professionalism, teamwork and integrity, building lasting legacies and preserving wealth across generations. Reach us today to grow your wealth. Sterling Asset Management and Trustees Limited, adding value. Over 40 years ago, we began a journey of excellence, innovation and growth. We are Sterling Asset Management and Trustees Limited, SAMTIL. With cutting-edge solutions, SAMTIL delivers value to institutions, corporates, retail investors and HNIs through its subsidiaries, trusteeship, registrar services, stockbroking, asset management and financial advisory. We continue to expand opportunities for our clients. 4 decades on, SAMTIL has remained customer-focused, driven by innovation, professionalism, teamwork and integrity, building lasting legacies and preserving wealth across generations. Reach us today to grow your wealth. Sterling Asset Management and Trustees Limited, adding value. Over 40 years ago, we began a journey of excellence, innovation and growth. We are Sterling Asset Management and Trustees Limited, SAMTIL. With cutting-edge solutions, Samtil delivers value to institutions, corporates, retail investors and HNIs through its subsidiaries, trusteeship, registrar services, stockbroking, asset management and financial advisory. We continue to expand opportunities for our clients. 4 decades on, Samtil has remained customer-focused, driven by innovation, professionalism, teamwork and integrity, building lasting legacies and preserving wealth across generations. Reach us today to grow your wealth. Sterling Asset Management and Trustees Limited, adding value. Over 40 years ago, we began a journey of excellence, innovation and growth. We are Sterling Asset Management and Trustees Limited, Samtil. With cutting-edge solutions, Samtil delivers value to institutions, corporates, retail investors and HNIs through its subsidiaries, trusteeship, registrar services, stockbroking, asset management and financial advisory. We continue to expand opportunities for our clients. 4 decades on, Samtil has remained customer-focused, driven by innovation, professionalism, teamwork and integrity, building lasting legacies and preserving wealth across generations. Reach us today to grow your wealth. Sterling Asset Management and Trustees Limited, adding value. Over 40 years ago, we began a journey of excellence, innovation and growth. We are Sterling Asset Management and Trustees Limited, Samtil. With cutting-edge solutions, Samtil delivers value to institutions, corporates, retail investors and HNIs through its subsidiaries, trusteeship, registrar services, stockbroking, asset management and financial advisory. We continue to expand opportunities for our clients. 4 decades on, Samtil has remained customer-focused, driven by innovation, professionalism, teamwork and integrity, building lasting legacies and preserving wealth across generations. Reach us today to grow your wealth. Sterling Asset Management and Trustees Limited, adding value. Over 40 years ago, we began a journey of excellence, innovation and growth. We are Sterling Asset Management and Trustees Limited, Samtil. With cutting-edge solutions, Samtil delivers value to institutions, corporates, retail investors and HNIs through its subsidiaries, trusteeship, registrar services, stockbroking, asset management and financial advisory. We continue to expand.
Thank you so much for holding on. We appreciate your presence once again. And remain your moderator to gather the data. Today, we'll be tackling a critical topic. What will drive Nigerian financial markets over the coming months? You might be curious to know why we chose this topic. This topic will examine the key domestic and global factors expected to shape Nigeria's investment landscape. We will discuss the implications for fixed income and equity markets and highlight practical strategies that investors can adopt to position their portfolio for the opportunities and risks ahead. By the end of this webinar, you will walk away with actionable insights and strategies that our speaker is going to direct us to help us to make brilliant investment decisions over the next couple of months, all within 90 minutes. We want this to be very interactive, so please make use of the chat box and send in your questions to answer them at the end as our question and answer segments. Now, it is my pleasure to introduce to you our speaker today. Our speaker today is Dr. Patrick H. Media. Permits me to his presentation. Dr. Patrick H. Media is the head of research Sterling Asset Management and Trustees Limited, SAMS, where he leads the firm's macroeconomic, financial markets, and investment research functions. Dr. Patrick is an accomplished economist, investment strategist, and capital market professional with extensive experience in economic research, financial markets, portfolio strategy, and policy analysis. He provides strategic insight that supports investment decision-making across asset classes, with strong focus on the Nigerian economy, monetary and fiscal policy, fixed income, equities, and global market development. Beyond his corporate responsibilities, Dr. Patrick is a respected thought leader and public speaker who has participated in high-level economic discussions and industry forums. Today, he'll be speaking on what will drive Nigerian financial markets over the coming months. Ladies and gentlemen, please join me in welcoming Dr. Patrick Edentia.
Thank you so much, Denta, for that introduction. I must say that I'm happy to be here to discuss this very important topic, what will drive the Nigerian financial market in the coming months. Of course, if you are familiar with the Nigerian terrain, you would have seen, inflation, you would have seen interest rate, you would have seen liquidity, and you would have seen what is happening to reserve. These factors are going to play a significant role in looking at what is going to drive the financial market going forward. So just join me as I just unpack this topic so that we can listen. I want to be sure that you can see my screen and you can hear my voice. If you can, I'll need to stop so we can then proceed. Oh, great. So we can then continue. So, like I've said, the topic is what will drive the Nigerian financial markets in the coming months. To guide this discussion, we will run through it looking at these subheadings. We will look at an executive summary. We will look at an understanding of the financial markets. We'll also look at where Nigeria stands today in terms of the macroeconomic environment. And then we'll look at the financial market review, a review of the financial market, and that will take us into the election factor. This year is a pre-election year, so we want to then see how this is likely going to shape, what will happen in the market. Then we will then move straight forward to the key theme of this discussion, which is what will drive the market going forward. And then what strategy can an investor be looking at in order for us to be able to take position? Because at an important time, then we then need to be able to take position in the market. Then lastly, we'll look at the risk, what we will be monitoring as investors. So these are the sub-themes that we'll be looking at. Now, straight away, the executive summary gives us an overview of the key highlights that we will be mentioning at this discussion. And for us, we are saying that going forward, the key factors that will determine the market going forward are, one, the macroeconomic reforms that we are seeing, liquidity conditions, corporate earnings, foreign investors' participation, and policy direction. These indicators will play significant role in determining the financial markets going forward. So, just to provide an understanding of the financial market, the financial markets are platforms where individuals, companies, and governments raise funds and invest money. And they perform basically three functions. The first is that they connect investors with businesses and government that are requiring funds. Second is that they help determine the value of assets. And these assets, like we have here, includes stocks, bonds, and currencies. And they also help to provide investment opportunities for individuals, and institutions. So these are the key basic functions of, the financial market. And it is important that we say it at this point that the financial market, provides that channel into which savings are being transferred into productive means. So basically what the financial market does is that the financial market channels savings into productive means, productive investment. So that's just an highlight that we felt that we should put out there. Basically, the financial market has 4 components, and the components includes the money market, the capital market, the FX market, and the commodities market. Of course, in the money market, we are talking about short-term instruments, short-term borrowings and lending, instruments that are less than 1 year. And we have some examples that we listed there, the TBs, the commercial papers, certificate of deposit, and interbank market. This market is driven by the activities of the CBN, interest rates, and liquidity conditions. The capital market, on the other hand, has 2 subcomponents, which has to do with the equities market and the fixed income market. Of course, the equities market, we are talking about shares that are listed on the stock exchange market. And the key drivers of the equities market are corporate earnings, investors' confidence, and economic growth. For the fixed income market, the key drivers are inflation, interest rates, and fiscal borrowing. An important part to emphasize here is that the equity market, unlike the money market instrument, is a market for long-term financing. The FX market, on the other hand, is also looking at buying and selling, but in this case, is looking at buying and selling of currencies. So you are buying naira to dollar or dollar to naira, as the case may be. This is the market where those kind of transactions take place. And the key drivers of this market are the foreign reserve, oil prices, FX liquidity, and foreign investment flows. For commodities, which is the last component of the financial market, what it does is that it's looking at, crude oil prices, agricultural commodities, precious metals, and the likes, and then gold, And what drives this market, basically, the global demand, supply conditions, and weather. Basically, the financial market has a link, with the economy. And it's important that we all have an understanding of how this link, what is the channel through which the economy affects the financial market. And that's what we are trying to show here. An increase in economic activity, in which case we are talking about GDP, what that will do is that it brings about increased performance of firms. And when firms are performing well, their corporate earnings, their corporate earnings also improve. And increased corporate earnings increase investors' confidence. And investors' confidence, in this case, we are talking about both domestic and foreign investors, in which case both domestic and foreign participation. And once that is increasing, what you then begin to see, asset appreciation, whether it is, as stock and the like, you begin to see appreciation. So this is the channel through which the economy, affects the financial market. So what is also very important, we have also seen that the Nigerian financial market is entering a new investment cycle. And why did we say that? We are saying that because we have seen some level of macro stabilization. Macro stabilization, in which case we are talking about the credibility of the reforms that we have seen that has brought about some level of stability in the exchange rate. We have seen moderation in the level of inflation. Just yesterday, we saw the inflation numbers for July, and we saw that inflation came down to 15.43. And of course, even before now, we have seen how inflation has been moderating, except during the period when we then saw the impact of the Iran and US war, which then changed it. But again, the rate of increase of inflation, even at that period, has been moderating since then. So once macroeconomic starts to moderate or stabilize, the next part that you would see is economic recovery. Economic recovery in the sense that you begin to see improve or increase economic activities. Just what we have seen in recent time, we saw that our GDP for last quarter was about 3.89. And we are saying that by the time we see some level of macroeconomic stabilization, as we have mentioned, and the economy continues to recover, what we will now begin to see, we will see some level of growth rate that is higher than what we have seen. And that's why you see that the World Bank has come up to say that, oh, the Nigerian economy is going to do a 4.1% growth at the end of the year. In-house, we have also said that we are going to do a growth rate of between 4.3 and 4.5, by the end of the year. And as the economy starts to grow, what you will then be seeing is that markets will then begin to reprice, to adjust to stabilization and the recovery of the economic growth. So you begin to see growth, in the economy. You begin to see markets that are repricing, price of assets are being repriced in such a way that they are capturing, the fundamentals that have changed in terms of the macroeconomic environment and in terms of the growth of the economy. So again, having said that, the key message there is that it is important that as an investor, we get to know that markets price the future, not the past. So for investors who have clear understanding of the market at this point, and they are seeing the direction of the market, this is the time to be looking at taking position in the market, because if you don't take the position now, and by the time markets start adjusting and they are now repricing assets and you are coming to the market at that time, you might be entering at a very high price. So it's important at this point for you to have understanding of the market, so that you can know what is happening, so you can take position for the future. That's why we said market price the future, and not the past. So we've just also mentioned that the Nigerian economy, where does Nigerian economy stand today? In which case we are going to be looking at the macroeconomic scorecard. And in looking at the macroeconomic scorecard, we are trying to say that what we have said earlier about the adjustment of the stability of the macroeconomic environment and the stability of the macroeconomic environment and some of the key macroeconomic indicators that we have seen in terms of the stability of the macroeconomic environment. So what we did here is to give an overview of the scorecard of the macroeconomic environment of Nigeria, the key macroeconomic indicators in terms of inflation, in terms of interest rates, in terms of FX, that's the foreign exchange, in terms of reserve, and in terms of GDP growth. Now, what is important for all of these indicators that we have mentioned is the improvements that we have seen in these indicators. Just like we said earlier, yesterday we got the inflation numbers for July, and we saw that inflation has further moderated to 15.43. We have also seen high level of stability in the exchange rates. If you check the gap, which is an important part to measure when you are looking at exchange rates, is to look at the gap between the official and the parallel market. In the last 6 months, that gap has remained far below 100 naira. So what it does is that basically it takes away speculative activities, it takes away arbitrage activities, from that market. And the beauty of that is that when the FX is stable, investors can then plan their investment. And so that's the good thing about the stability of the FX that we've been talking about. If you also look at the reserve, which we're also going to see, in details going forward, is that reserve so far has gotten about 52 billion US dollars. And that gives some confidence for the CBN that they are able to support the FX, to be stable at some point. I think that's the reason why you see some level of stability. That's giving some level of confidence that the FX is likely going to be stable, and all that. And just like I mentioned earlier, if you look at the GDP growth of Nigeria, what we did was 3.89 last quarter. And we're expecting the quarter for GDP for Q2 to come out. And we're also expecting it to do around slightly above 4%. So you see that in all of the key macroeconomic indicators, we are seeing some level of improvement. And that's why we said that investment take position we look at the future when you are taking position, not the past. So once you are looking at all of these macroeconomic indicators and you are able to tie it into what is the future going to look like, what is the direction going forward, that will help you to be able to then say, okay, how do I then strategically take position so that I can then come to the table early enough to be able to benefit when the time comes. So again, one of the key drivers that we have seen that have shaped the direction of the market, before now, even up to now and going forward, is going to be the level of inflation. Inflation plays significant role, in the macroeconomic environment. And the reason why we have said so is that inflation is going to determine CBN decision. Today, the CBN has kept monetary policy rate at about 26.5. If you check the yield, the stop rate of various auctions and bonds that we have put up, the CBN has also kept it high. One of the reasons is to ensure that the real return is positive, in addition to ensure that liquidity is being managed, in addition to also ensure that FX is also being stable. So inflation plays significant role in the macroeconomic environment because, like I said, it affects the decision of the CBN, determines the decision of the CBN. It also determines bond yield. By the time inflation starts coming down, we will see CBN will begin to cut rates and yield will begin to come down. It also determines consumer spending because we have said that one factor that is going to play significant role in determining the financial market going forward is inflation, because by the time inflation starts moderating, purchasing power of consumers will increase. And by the time they start buying products of companies, you see that what that will do is that earnings of those companies will increase and will then begin to see profits and all that. So inflation also helps to determine, consumer spending. And again, another very important part is that inflation helps to, determine equities value. A big driver of what is going to happen to the financial market. Again, the monetary policy has also, like we said, has kept rates high. The worry for many people is to find out when is going to be the turning point of the monetary policy. One thing that is very certain is that the high rate that we are enjoying now is not going to stay forever. The moment inflation starts moderating, the moment inflation starts moderating, exchange rate is now relatively stable in such a way that there's credibility in the reform that can naturally attract investors to the Nigerian economy. That will help to keep exchange rate stable. The moment we see all of that, we can see what we will then begin to see is that rates will then begin to be adjusted downward. But the key part is that that an investor would ask is that the timing for monetary policy easing will determine asset rotation. And at that point, once the CBN start to cut rates, we will then begin to see some level of rotation into other asset classes, as we are going to see going forward. But as we have here, the current high rate that we are currently seeing in the market today is, favors fixed income, and of course, it's putting pressure on equities, on the equities market. But again, by the time rates start coming down, we are going to see some level of improvement in the equities market, and then we are going to also see some level of reduced borrowing costs at that point. So again, a key factor, just like we've been talking about, is about what is happening to the foreign exchange market. And like I mentioned earlier, is that the foreign exchange market is moving from volatility to stability. We try to plot a chart of what is happening to the foreign exchange, the naira dollar exchange rate, and then the official exchange rate gap. Now, what you will see is that, yes, the official exchange rate is still volatile, as you are seeing. That's it, because that indicator basically is a volatile variable. But if you look at what is happening to the gap, which is like the gray line that you are seeing, you see that stability that you are seeing. Some level of appreciation, some level of reduced gap, like I mentioned, then you will then see that gap is some kind of stable. And that is also what is driving, that stability. So what factors do we think have driven the exchange rate, have led to that stability in the exchange rate? One is about oil receipts. You agree with me that the US-Iran war has brought about oil prices going up, And today, the oil price that we are seeing is still higher than the assumption that is put in the budget. So that receipt is also helping to attract significant inflow, which is also helping to stabilize the exchange. Then two is the reserve, and of course that's coming from the increased oil receipts that's driving reserve upward. Then three is the FX liquidity. Now it's because of the liquidity, it's now that has kind of removed what we call that arbitraging activity or speculative activities in the so-called black market. And so that is also helping to put that, that stability in check. And then the last one, which is the effort that is done by the CBN, the Monetary Authority in recent time, is about foreign inflows. Now, when we speak of foreign inflows, we are talking about remittances, we are talking about foreign investment, in which case we are talking about whether FDI, whether it is loan, whether it is FPI, foreign private investment. All of these has been factors that have played significant role in helping the exchange rate to be stable rather than being volatile. Now, a key part that we have seen again in the equities market is that the equities market has rallied strong, but the worry that investors are asking now, which is a key question, is that can the fundamentals that we are seeing, can they sustain this rally? Just like we have seen year to date, I think the FX market, the NGS have done about 15.91 as at yesterday, 15.91 year to date return. So that's high compared to what we closed the year with last year. And then if you look at what is happening in terms of the market cap and in terms of the ASI year to date, you see that growth. So the market has rallied. So the worry we are asking now is, can the fundamentals sustain this growth that we are seeing? And what has driven the market? What are the key factors that have brought about this rally that we have seen in the market? We also have them to say the liquidity rotation, banking sector performance or the banking sector earnings, and of course, the high interest rate environment that is favoring the banking sector, then improve investors' confidence, then improve foreign investors' participation. So what we then tried to do was to look at a sectoral performance. And we are saying that looking at the sector, what we have seen is that where has value emerged? Where can we see that the return is high? What we try to do here is to look at market cap of the various sectors that are in the stock exchange, various sectors, that are in the stock exchange. And as we can see, from the consumer goods sector to the construction and real estate sector. Now, if you look at the market cap, the market cap as at December 25, vis-a-vis what has happened to the market as at June, you will see that the growth rate of the consumer goods is about 16%, and that's about the lowest that we have seen. And of course, one of the factors that is affecting it is the purchasing power, high inflation, high interest rate environment that sector is currently operating in. Meanwhile, if you come to look at sector like oil and gas, whose market cap has gone up by about 90% from December last year to June. And one of the key factors that have driven it up at that time is because of the oil prices, that we have seen, and that has also brought significant increase in that sector. Another sector that has also done very well between that market, between January, December, and June, is the health sector. That sector's market cap has grown by about 83%, 83.37% from December and June. So that's also a significant increase, followed by the ICT sector. One of the factors that is driving all of this is because of the increased demand for the assets of these companies or the stock of these companies, and that is also driving their prices, and that's also driving their market cap, in the various sectors. So if you look at the ICT sector, for instance, it's saying that, of course, digital economy is what is driving it. So again, if you look at the healthcare demand, pharmaceutical expansion is also a key factor that is driving the healthcare sector, and that's why we can see that high growth in those sectors. If you look at the construction sector, which is about, I think, the fourth position when you are looking at the sectors that are on the stock exchange. That sector, if you compare its market cap as at December to that of June, it has grown by about 67.28%. And of course, the reason is not far-fetched. Increased infrastructure projects, real estate recovery, and the like. These are factors. So this gives us an overview of where value has emerged in the sectors that are listed in the stock exchange. And as an investor, you want to continue to look at this sector, and then you begin to look at firms in this sector, and then be looking at how you can then looking at take position. But I think the key message here is to emphasize that the year-to-date returns is about long term. So if you are putting your fund in this market and you are thinking that you want to also get the value that the market is giving, then you must be ready to leave your fund for a number of time. And like I said, if you want to do like a short term, then you may not be able to enjoy some of this return that we are seeing in this sectoral performance. Now, having looked at the market, because there are, like we said, there's the equities market, there's the fixed income market. The worry again is that one of the factors that have affected the market in, now, even as we speak, is the high yield in the fixed income space. A lot of investors now prefer to say, okay, let's take our fund to the high yield space so that we can enjoy the current high yield rather than putting it in the. But the worry is that the high yield gives an opportunity for investor. And the concern is that will this high yield remain forever? And of course, I'm sure that you agree with me that it won't stay forever. And that's why we said that investors, one of the key things investors are asking is that, should I lock in currencies or wait for rate cuts? These questions are key questions that investors are trying to provide solutions to decide, what they should be doing at this point. So just like we said, the high yield is still there as long as inflation is still high, as long as liquidity is still high. Today, as at this morning, the system liquidity is standing around about 5 trillion naira. And of course, I know that the CBN is going to be doing all it can to mop out this excess liquidity. And the reason is because of the fact that we're in a pre-election year, and the CBN would not want a situation where high system liquidity will bring about increased demand of FX, and that will give us FX problems and all that. So they're going to be seeing how they will mop out this excess liquidity. So again, that's also a concern. As long as these two indicators are there, like I said, inflation is high. Like I said, system liquidity is still very high at this point. And then maybe some level of stability, we are seeing stability in the FX. As long as these first two that I mentioned are there, we will see this yield that will be high. But by the time we begin to see these indicators begin to change, of course, what that will do is that the CBN will now begin to change its plan. And by the time they start changing its plan, that will now begin to affect, how investors are going to rotate their investment, to various segments. So again, the election factor. I think this is a very important point that we also need to talk about. Traditionally, what we see is that during pre-election year, the markets usually, gives negative return. You see that negative return in the market. And we've seen that in pre-election year. In 2015, we had an election, but the pre-election year was 2014. And the markets, the return in the market was about negative 16.14. In 2019, we also had an election. 2019 had an election. 2018 was a pre-election year. And that year, the market also came down, did negative 17.81. In 2023, we had an election, but the pre-election year was 2022. But we saw that the market did 19%. Next year is going to be an election year. And I can tell you, just like I mentioned, the market is doing over 55% return as we speak. And that's what we're trying to say, that the dynamics have changed because the reforms are now there, and those reforms are putting some level of confidence in investors. And that's why we are not seeing that negative returns in the market, despite the fact that we are in a pre-election year like other years. And we are saying that, of course, election years usually influence the market via 4 ways, just like what we have here. It influences through government spending, through policy uncertainty. And that's why we are saying that right now, the policy is now kind of stable. We can see that macroeconomic stability, which is not there. We can see traditionally, we usually see liquidity expansion in pre-election year, but that's why the CBN is also very careful in ensuring that they mop up excess liquidity so that it doesn't cause further fuel inflation or further fuel effects as instability that can create problem for us. So again, in pre-election year, we usually see investor sentiment. Investors will have this negative sentiment because they see the environment as volatile. But this is not the case in this pre-election year, and that's why we are now saying that in pre-election year, we see equities being favored, because of increased government spending. In pre-election year, we see what do we call it? Bond, high borrowing costs, just like we are seeing now. We also see capital flows. But like we said, the narrative is changing now because the market dynamics are not the same as it used to be in the pre-election year that Nigeria has passed through. Now, and I think this is one of the most important aspects of this discussion. What will drive the market going forward? A number of factors are going to play significant role, and these factors are what we expect as an investor that you need to be checking out for so that you can then be able to see how you can take position. The first, I think we'll be mentioning it, and we cannot stop mentioning it because it plays significant role in the economy, is the inflation trend. What is happening to inflation? Is it trending downward? If inflation is trending downward, do we have an inflation target? What is the target that inflation, that the CBN or that the authority, the government is targeting in terms of inflation? Are they able to meet their targets? Because once that is done, that will determine what will happen to interest rates, and that will determine to a whole lot of macroeconomic indicators that we are going to be seeing. The second factor that's also going to play a significant role in driving the market going forward is oil prices. Oil prices has, like we all know, some level of positive impact on the economy and some level of both positive and negative impact, depending on the direction. On the positive side, it can bring about increased government expenditure, it can bring about increased reserve, it can bring about FX stability and all that. But on the negative side, first, start from the pump price that we are seeing. Because we are not fully producing oil in full capacity, what you will see is that oil pump price at the pump will go up, just like what we are seeing now. And that will increase transportation, that will increase logistics, that will increase cost of production, and that will also make CBN, the monetary authority, to want to hold rate so that they want to control inflation downward. So oil price is also a key factor that is going to be determining the market going forward. Another key factor that will determine the market going forward is the monetary policy direction. What's the direction of the market? What is the CBN going to cut rate? If the CBN going to cut rate, what sector, which asset class do I need to be transferring? Do I need to be looking at to diversify my income to? Is the CBN going to keep rate high? If they are keeping rate high, which of the TBs, which of the instruments, short-term instruments, should I be looking at the FGN bond, or I'm looking at TBs and all that? So these are issues. So the direction of the CBN in terms of its policy direction also plays a significant role. And to make the decision, the CBN is also going to be watching a number of these macroeconomic indicators that we have mentioned. They are going to be watching what is happening to inflation. They are going to be watching what is happening to the stability of FX. They are going to be watching what is happening to liquidity conditions. Once they can get this right, I think that's what is going to determine the direction. So as an investor, what you also need to do to help you guide your decision in terms of where should I place my fund, you are looking at all of these indicators. You are also trying to know, that will give you a pointer as to what the likely direction of the CBN, and that will give you a pointer as to the likely asset class that you can invest your fund is at this time. A key factor too that will also determine the market going forward is foreign investors' participation. And what will this do? Naturally, once we see increased foreign investors' participation in the Nigerian market, basically it will help us to provide more liquidity in terms of FX, and that will help us to, bring some level of confidence in the market. So again, that's very important. Again, if you see what has happened in the Nigerian economy, we saw the S&P ratings that they are putting Nigerian economy among the emerging economy, that they'll be studying for 2027. So all of this is going to put some level of positive signal, and that's going to, shape what is going to happen to the market, going forward. Again, a very key factor that would also drive the market going forward is the corporate earnings. We have seen many of these companies, or many companies that are listed on the stock exchange. We have seen the fantastic profit that most companies, in terms of their earning, are declaring. And we've asked that question earlier. The sustainability of these profits is key to determine, what's going to happen to the market. And again, the market performance, like we have said, will be dependent on the revenue growth. Is the corporate earnings of these companies that they are declaring, are they going to be increasing? So as an investor, you are watching the revenue growth of these companies to see whether it's increasing. You're also watching the cost. You're also watching investment margin, profit margin, and you are watching the dividend sustainability. A lot of these companies that have listed, that have released their earnings for half year, they've shown some level of dividend payment and all that. So you are watching all of these factors to determine that. A key factor too, which is the pre-election year that we've been talking about, that will determine the market going forward, is the election, the fiscal policy, and government spending. These factors are also going to play a significant role in trying to shape the market and determine how the market will move going forward. At the external level, we have about 3 other indicators too that will shape the market. And these 3 indicators, again, oil market is coming up again because it has impact both at the domestic and the foreign level. Then we have global interest rates and we have geopolitical risks. So these 3 indicators play significant role in shaping the market at the global level. Of course, don't forget that whatever decision of the US Federal Reserve, whatever decision they make in terms of their interest rate, it has significant impact on the Nigerian economy in terms of how the FX market is going to be and whether capital is going to flow out from the system. So that's why it's important that we're also checking closely what is happening to the foreign reserve, what's the decision of the foreign reserve, of the Federal Reserve of the United States. And again, that will also help to guide what is happening to dollar strength. The more dollar is strengthening, the more we see some level of capital outflow and all that. And again, what is happening to emerging market flows, Again, you see what is happening. Many emerging markets, as we speak, are enjoying significant capital flow. And the reason is because of some of the reforms that they are embarking upon, that is helping them to be able to improve FX liquidity and improve investors' confidence and attracting capital flow, to this economy, So, having looked at all of this, the question now is, where does opportunities lies? As an investor, where should I be looking at to say, okay, I want to be able to have opportunities, having seen the macroeconomic environment and some of the issues that we have raised earlier? What we try to do here is to classify it into 4 basic segments: the money market, opportunities in the money market, opportunities in the alternative investments segment, opportunities in equity market, and opportunities in the in bonds, and then mutual funds, that the various type of funds that that will be coming across. But again, the key question that we will just need to say is that it depends on the investor's profile. Like what we have on the table, we can see on the screen, is that a conservative investor will look for a mixture of fixed and money market kind of instruments, or some level of investors who want to do some level of balance investment profile. You do a mixture again of fixed income, and equity, depending on your risk profile. But if you're a growth investor, interested in, then you can then be looking at equities and then alternative investments. But the central message in making your decision about whether you want to do money market or alternative investment or equities or federal government bonds and mutual fund is about understanding the fact that successful investing requires diversification, not prediction. A lot of times what we have seen is that some some investors have the mindset that they can predict the market, and because of that, they put all their fund in one particular segment, whether it is money market, whether it's fixed income, whether it's alternative investment, whether it's mutual fund and the rest, and they put all their funds in one basket. And what happened? Because they feel that they can predict the market and something contrary happens to that market, what they will not see is that their investment begins to go downward. But if you are able to diversify and you choose properly how you want to diversify your investment at this point, what you will see is that you are going to benefit because, of course, as one segment is affected by whatever decision that is being taken, the other segment might not be doing well, and then that will be able to cover for whatever loss that you've had in one segment. And that's why we put this very central message here that the successful investor investing requires diversification, not prediction. So, having said all of this, what are the key risks to watch? These key risks that we need to be watching out for in the process of taking the decision are classified into the domestic risk and the external risk. And for the domestic risk, we are looking at policy uncertainty. Remember that what we have said, one of the key factors that have driven the market is the stability, macroeconomic stability. And we expect that this macroeconomic stability will continue to be there. So once there's policy uncertainty, it becomes an issue. Persistent inflation. This again is also a key factor that as an investor, you need to watch out for. Again, political transition risk, because we're in a pre-election year and all of the issues that come around politics and all that. And fiscal pressure, then lower consumer purchasing power. This has a significant impact in affecting corporate earnings. Just like we said, a lot of firms that are bringing out their earnings for half year are declaring significant profits, or they might even declare dividend. So, but what happens to consumer purchasing power will play significant role to determine whether the growth in terms of profit that we are seeing for these firms are going to be sustained or not. For the external risk, we have oil price decline. We also have global recession, higher for longer global rates, geopolitical tension, and weak consumer demand. To close this discussion, what we try to do is to look at 5 central investment lessons that we have the mindset that you would have learned in the process of this discussion, or while we are having this discussion. The first is that markets are transitioning from policy-driven to fundamental-driven performance. The second is that election creates volatility, but also opportunities. We have seen that in terms of the market, and we have seen that in terms of how the various asset classes are doing in terms of the Nigerian space as we speak, despite the fact that we are entering into we're in a pre-election year. The third is that interest rates will determine asset rotation. And of course, we've said that as the CBN is going to closely watch some of these indicators that we have spoken about and to see their direction, because they are going to be guiding the decision of the CBN going forward. In other words, what is happening to inflation, what is happening to liquidity, what is happening to the FX in terms of the FX market. And that will help to determine, the rate. The fourth is that quality companies with strong earnings will outperform. And this point cannot be overemphasized. As long as you want to continue to play in the equities market space, you need to be able to check, quality companies and strong earnings. And these are two very key indicators that you need to watch out for as an investor. One, a firm can have strong earnings, but it's not quality. And sometimes you can also find a firm that is quality, but does not have strong earnings. So you have to check these indicators to be able to now determine where and how to place your fund. And the last, which is a very central message in this discussion, is that diversification remains essential. Do not try to over-predict the market, whatever asset class that you're trying to put your fund in. Do not try to over-predict it and place your fund, all your eggs in one basket, like they will say. Always try to see how you can diversify and then, look for the appropriate asset class, to be able to place your funds. So with this, we'll come to the end of this discussion. I want to assume that I want to thank you so much for listening. I'll be looking forward to your questions, and we'll be able to provide some level of response to them as time goes on. Thank you so much.
Thank you so much, Dr. Patrick. Wow, what an insightful section. Thank you once again, Dr. Patrick. Dear participants, hope you enjoyed the presentation as much as I did. You've been able to take 1 or 2 points that will influence your financial decision in the next couple of months. If I'm seeing your reactions, thank you so much. What stood out for me the most during his presentation was that Dr. Patrick emphasized on the importance of diversification. So it's going to tell us as investors that we should see the importance. We should know how to diversify our funds. And also, he mentioned that we should look at the future while taking financial decisions. And the role inflation plays in macroeconomics and economic directions. Thank you once again, Dr. Patrick. Before we move to the questions and answers segments, I'm sure you send in your questions. Just a quick reminder that this webinar is hosted by Samtu. Samtu is an asset management company that has been in existence for over 4 decades. It was established for the management of various security equities, fixed income instruments, other alternative investments like real estate. We have various subsidiaries like AML, Associated Asset Managers Limited, who are in charge of stockbroking. We have Pace Registers Limited, which is a SEC-licensed subsidiary in charge of our end-to-end registry solutions, including shareholders record management, corporate action processing, and dividend administration. We also have the Samtu Fund Managers, where we have our Samtu Money Market Fund and Samtu Mixed Income Fund. Remember, our speaker spoke on diversification. This is where it comes in. Then we have Samtu Trustees. Samtu Trustees provides comprehensive trusteeship and advisory services. Here, you can open trust accounts for your children's education and investments. For your micro leasing and consumer lending, Samtu Leasing was specifically created to guide you through this. We also have Samtu Capital Limited, a licensed investment banking advisory firm where we provide strategic advisory services to corporates, governments, and institutions. For any or all of these services, kindly contact us at info@sapling.com. Thank you. Now, before we dive, and we can now dive into questions if you have any. Thank you. We can dive into questions and see your reactions. Thank you so much. So before people start asking, let me ask a question. So Patrick, I have a question, please. Yes, you said something about how election creates values, like you mentioned something. I want to know, how does election create opportunities? Because you said election creates opportunities as well.
Okay, so can you hear me?
Yes, sir, we can hear you, sir.
Okay, great. So just like I said, of course, I presented something like that on the slide. And I said, yes, election creates risk, but it also creates opportunity. And I said the difference between traditional election years or pre-election years that we have seen and this one is that unlike pre-election year where we have uncertainty in the macroeconomic environment, this pre-election year is kind of different, because if you check the trend, which we try to put in the presentation, is to say that during pre-election year, we see inflation usually going upward. But this is a pre-election year, and we are seeing inflation coming down. During pre-election too, we usually see exchange rate, most times not being stable. But this is a pre-election year, and we have also seen the stability in terms of the exchange rate. And that's why we plotted the official exchange rate gap, and we are seeing that, appreciation in the exchange rate and some level of stability. And again, during pre-election year, if you look at the market, what we also presented in terms of the NGS performance, you will see that the NGS in terms of performance in 2 pre-election years that we showed, it has shown some level of negative performance in terms of return. But this is a pre-election year, and we are seeing the market, like I said, the market year to date, as at yesterday, has done about 55% return. That's positive. So these are opportunities that you then begin to see, particularly in the market, particularly in other asset class, because what happens in terms of, the market, there will be opportunities for fixed income investors, those who want to take position in the fixed income space, whether it's T-bills, whether it's federal government bonds, those who want to take position in the equities market, because the equities market is not negative, as you have seen, the return is positive. So that's an opportunity. So, and those are some of the opportunities that we get to see that we've not been seeing in traditional pre-election years that we are seeing in this current pre-election year. I don't know if that answers the question.
Yes, thank you so much, Dr. Patrick. We have a question here from Mr. T. Yes, for the first question said, how do we forecast to a remarkable extent the market's reaction to next year's election cycle? Should I read it again, Doctor?
Yeah, you can read it again. Let's take it again.
It said, how do we forecast to a remarkable extent the market's reaction to next year's election cycle?
So I think first is to put it to us here, just like I said, that diversification is key. One of the mistakes that a lot of investors put in place when they are making their decision, is trying to forecast accurately, what a particular asset class or what a particular asset class is going to perform, and they want to put all their fund in it. And that's why we have said that we must learn that spirit of diversification so that you don't think that you are forecasting too accurately and you then place your fund, all your funds in one particular, put all your eggs in one basket, like they will say. You must ensure that you diversify. But coming to your question, in trying to make that appropriate forecast, all of the key indicators that we have made mention of, you must be able to put them into consideration. So you are putting up, for instance, what is happening to inflation. What level do you think inflation is going to be, come the end of the year, come next year, come even the transition period and all that? How are all of these going to affect in terms of the exchange rates? That also has to be put into consideration. What is the level of economic activity in terms of GDP growth and GDP performance? You have to also be able to put that into consideration. What is the level of interest rates? That is also very key. And then the level of liquidity, then the level of the political environment. All of this is what you would have to put into consideration in trying to make that forecast. But don't forget, like I always say, forecast is more scientific. And in scientific, there are a lot of forecast tools that you want to begin to use to put. But that does not define the social environment that we live in. We live in a social environment where you can use a scientific method to make a forecast and you don't properly take into account all of these indicators that I've mentioned. So your scientific results that you would have forecasted might be giving you something, something on the one hand, and the reality will be giving you something on the other hand. So it's important that you're able to put into consideration all of these indicators that we have talked about, including the macroeconomic reform, the credence in the policy of the government, investor sentiment, and all of those things. It is when you are able to capture all of these that you can then be able to make an accurate forecast, and that will then guide you. But again, I will end by saying that always try to diversify. That is better than putting all your eggs in one basket. Thank you.
Thank you so much, Dr. Patrick. Okay, Mr. Emmanuel is asking, can you get the slides? Of course, yes, we'll make these slides available to all participants. Thank you. We'll send the recordings to all participants. Thank you so much. So we have another question. Dr. Patrick.
Yeah, I'm here.
Mr. TA said, how do we leverage artificial intelligence in making smart investment decisions, given the unpredictable nature of Nigerian financial market space? Should I go again?
Yeah, you can.
Okay, he said, how do we leverage financial intelligence in making smart investment decisions, given the unpredictable nature of the Nigerian financial market space?
So I think that is the talk of the town now. As we speak, everybody wants to begin to employ, financial intelligence into their investment decision taking. Yes, it's good. But again, like I always say, the extent of information that your financial intelligence, whatever the financial intelligence is going to give to you, will depend on the amount of information that is placed on the internet. So if you don't have all of those information on the internet, it becomes difficult. But I can tell you that is where the world is moving into. Everybody wants to be able to use their financial intelligence app and all that to be able to make decisions, to be able to guide their decision making in terms of what asset class they should put their fund, what is going to happen to the macroeconomic environment, like we have said earlier. And that is going to shape investment decision for various investors, whether it is foreign, whether it is local investors. Yes, that is an interesting aspect, and that aspect is continuing to evolve, and it will continue to evolve, But it is important that we also know that the extent to which you would get this decision from your app, from your financial intelligence app that you are using, will depend on the amount of information that is placed in it. So sometimes you use your what do we call it, your AI, your financial intelligence app, and you are seeing that the decision that they are putting there, or the decision that you are seeing, cannot guide you so well to make the decision accurately or as you need to make it. So at that point, it becomes an issue. But until we get there, you cannot completely say you want to rely on that. But at the moment, it is something that can guide you, it can give you a first-hand information before you now do a second-hand or a second test, of to now say, okay, what investment class should I put my fund? Thank you.
So thank you so much, Dr. Patrick. Thank you so much for answering that question. There's another question from Bita Suleiman. What risks are investors currently underestimating in the Nigerian market? Should I go again, Doctor?
Yeah, go again. Let's see.
What risks are investors currently underestimating in the Nigerian market?
So, some of the risks I mentioned, but at the moment now, is high inflation, because like we have said, yes, inflation is moderating, but it is still double digits. And I've said it in different places that in the US, inflation is about 3%. And you need to see how an average American will scream when they see prices going up with 3%. In Nigeria, inflation is 15%. 15% is high and is very massive. So that's one of the biggest risks of the market. And that's why we say that going forward, what will shape the market is what is happening to inflation. Is inflation actually coming down? These are the things this is a very important risk. And whether it is now going to change, don't forget that we are seeing inflation coming down now. And we are in a pre-election year. And the fear about increased spending of government and how that can drive system liquidity upward, how that can also revert the downward trend that we are currently seeing inflation doing, is also a very important concern. So that's also one. The second risk, again, because we are in a pre-election year again, has to do with the stability, in the FX. Now, because of the reforms that we have seen, we've seen some level of stability. And the worry for many analysts is to say that if there is increased expenditure by the fiscal policy or by the fiscal authority that is not properly monitored, what we will see is that would drive system liquidity, that would drive demand for dollar, and that would create problem in the FX markets. And so that's also a second risk. And I think another very important risk is the stability of the reform that we are currently seeing. That's very key. Whatever happens to the reform that we are enjoying today, all investors, whether domestic, whether foreign investors, they are closely watching what is happening in terms of that. So if there's any issue that reverts that in terms of the macroeconomic reform, that's going to be a very important risk that people are, looking. Then the last one, which we have also mentioned, is the election. And I think that's also a driver of many of the key macroeconomic indicators. what is going to happen now? Investors are closely watching, the political environment in terms of decision, in terms of outcome, and that's going to play significant role in affecting investors' confidence and whether capital is going to flow to Nigeria or not, and all of that. So these are some of the risks that investors will closely watch, particularly as we are entering in the coming months, as we are entering the election period, as we are entering the transition period. Thank you.
Thank you so much, Dr. Patrick. Chijuke also just said, thank you, Dr. Patrick. We are great in the way you handled presentation. The question is, I'm very particular about policy distortions. Don't you think the stability we are enjoying might be a small screen going by the trend of what happens in election years in the country? Aside the wisdom of diversification, are there other strategies you can suggest to help investors stay alert and be guided? Should I go again, Doc?
Okay, go again.
The question is, don't you think the stability we're enjoying might be a smooth screen going by the trend of what happens in election years in the country? Aside the wisdom of diversification, are there other strategies you can suggest to help investors stay alert and be guided?
Okay. So again, what we said is that contrary to what the person who asked the question was saying, in traditional election years, we don't see stability in macroeconomic environment. And that's why we said, look at inflation. Inflation, plot the trend. If you, after this webinar, you can go and look at the trend of inflation in pre-election years and then see what usually happens to inflation in pre-election year, and then look at what is happening now. You also do the same thing for exchange rates. You do the same thing for the equities market. Then you will now come to see that in pre-election years, we usually have, in terms of macroeconomic instability in the economy. And that's why we are saying that one of the things that is shaping how the market is performing and how the market will perform going forward is whether this stability is going to continue. It's very key. This stability has also helped to bring some level of confidence, not just investors' confidence, and is attracting capital and is bringing about a re-rating of the Nigerian economy. You've seen FTSE did a rating, even though they are putting on suspend and we're expecting it to come again sometime ending of this month or next month. We're also seeing S&P rating of the Nigerian economy and putting it among the emerging economy for next year that are going to be watching. So these are coming out because of the reforms that we have seen in the Nigerian space, and the concern is that whether they are going to remain stable as we proceed. For the second question, about aside from diversification, what else can we do? I've said it again. The next in the coming months, whether you are an investor, whether you are a company, what will drive, the market is going to be, or people who are going to make it in the market are people or investors who have in-depth knowledge of the macroeconomic environment. And that's why what we try to do, or what you need to do in addition to your diversification, is to have in-depth knowledge of what happens in the macroeconomic space. That will give you a direction as to where do I need to put my fund? At what point do I need to rotate my fund from a particular fund to another fund? These are the issues you need to be watching out for. So yes, diversification is key. Two, aside from that, you must have full grasp of the macroeconomic environment. I must tell you that this is one important factor that's going to shape the market going forward. Investors and companies and organizations that understand the macroeconomic fundamentals and how it works are going to be the next generation winners. Thank you.
Thank you so much, Doug. The next question is for Tomide Omokunbe. He said, there are two questions. Number one is, what role should domestic investors play in sustaining the market activity in the financial markets in case foreign investors' participation changes? Okay, let me go again. What role should domestic investors play in sustaining the market activity in the financial market in case foreign investor participation changes? Number two, what major indicators could suddenly reverse the position direction of Nigerian financial market aside inflation and exchange rates? Should I take the second question
Yeah,
again?
no, it's
Or you're
okay.
good?
It's okay. It's
All
okay.
right.
I'm good. So I'll start from the second one. The major policy that can change the narrative that we are seeing so far, I think we've mentioned it and we cannot stop mentioning it, is political, macroeconomic stability. Like we have said, if there's any instability in these reforms, if there's a change, and that's why I was having a conversation with somebody some time ago, and I was telling the person was saying that, oh, now that we know that the CBN is going to hold rates, because the last meeting that the CBN had, it was almost unanimous that the CBN was going to hold rate. Everybody was saying that the CBN was going to hold rate. And the person now said that since everybody knows that the CBN was going to hold rates, was there a need for the meeting to still hold? Why not just say we are holding rate and let us go ahead? And I told the person, this period remains a very difficult time for the CBN. And why did I say that? I'm saying that because everybody is watching what the CBN is doing at this time. If the CBN misses it at this point, what you will see, there will be significant capital outflow. And that's going to affect inflation, that's going to affect exchange rate, and that's going to reduce the credence that investors have placed on the policy that we are enjoying. So at this point, the major macroeconomic variable, the major changer that can change the narrative that we are seeing now is if investors sense in any way that the policy that we have that is bringing about improvement in some of these indicators that we are seeing, that policy is going to be changed. That's going to cause a serious problem for us, Then coming to the first question, what can domestic investors do? The first is for domestic investors to understand, and I think I've also mentioned it, that the market is usually a market for long-term investors, particularly the equities market. So I've seen a lot of people, since the recapitalization of banking sector and that of the insurance sector, we have seen the amount of retail investors, increasing in the equities market significantly. And what does that do? Now, during earnings period or during when there's any asset price appreciation, what you then begin to see is significant withdrawal from the market. People now want to begin to take profit and all that. And all of these have a way of driving the market down. So one way is to say that what domestic investors can do, suppose foreign investors begin today to withdraw their funds away from the market, is to understand the narrative of the market, that the market is a place for long-term investment. So you are putting your money there, you are not just coming to put it to get asset appreciation and withdraw it. We are trying to understand what sector am I putting my fund today? At what point should I take my money from this sector or take my profit from this sector and put it in another sector? So not that you are withdrawing it and you are not causing that kind of downtown. Yes, we can have some people who want to withdraw after some level of asset appreciation, but we must know that the market is a place for long-term investment. So you should look at that. The second part is to also understand that if foreign investors decide to withdraw their fund today, we must also not join them to begin to take our fund away from the economy. Because by the time we are doing that, we are putting pressure on the FX. And when we start putting pressure on the FX, you will see depreciation in the exchange rate. You will see inflation coming up. You will see profit of firms, earnings of firms begin to decline. And all of this will have negative impact on the economy, and you just begin to see the economy will be moving towards a recession and all that. So we do not now need to join foreign investors when, suppose, like the question says, they decide to withdraw. We do not need to join them to also begin to take our money out. We should learn to keep our money inwards so that can also help the market, to remain stable and then to begin to be improving despite the foreign investors withdrawal. Thank you.
Thank you so much, Dr. Patrick. Thank you for breaking it down. Daniel Anaketin Felix said, yes, it is pre-election year. So does that mean that investment yield for investors and which instrument is best for investments? Should I go again, sir?
Somebody is talking at the background.
Sorry about that. I said, Daniel Anekete said, please, yes, it is the pre-election year. So does that mean that investment yield for investors, does that mean that investment yield for investors, and which instrument is best for investments?
Okay.
Please, those in the background, the audience should please mute, please. Thank you. Thank you. Sorry, Doc.
Okay, so that's fine. I think the major issue here, or the major point of concern, is about your motive for investing. And that's one thing you must know. A lot of times, what we have seen a lot of investors do is that they do the bandwagon effect. Everybody just follow the crowd. Oh, I'm putting money in stock market. Everybody's putting money in stock market. Oh, I'm putting money in federal government bond. Everybody putting. So you must understand your motive for investing. And in investing, if once you're able to identify that, that will then guide you to then know that, oh, today I want to put my money in fixed income instruments. As we speak, the yield of 365 days T-bills is about 20%. It also depends on your risk appetite. Do you have the confidence? Do you have the mind to, how are you a risk averse person? Are you, those are important. Those are questions that you need to ask yourself before you then decide, oh, where do I put my fund and all that. So it depends on you. One, what is your motive? Two, what is your risk appetite? These two questions are questions that you must ask yourself. You don't need to follow the crowd. You need to decide on yourself. Investment is a personal journey. So you must be able to build up your own journey yourself without following the crowd and all that. Second is about today, you will see that investment yield in federal government bonds are high. And just like we said in the presentation, this is one aspect why you even see that the market is dragging at the moment. If rates were down, I'm sure that the market would have been doing more than what it is doing today. But because rates are high and we have some very conservative investors, they will prefer to take their money from the market and go and put it in bonds or in any of the federal government instruments. So the key question or the key answer that I'll give to you is what I said earlier. One, your motive. Two is about your motive, and then what's the second one I mentioned? It's gone off my head, but the motive is very key, in making that decision about where to put your fund at this point. Thank you.
Thank you so much, Dr. Patrick. We have just 7 minutes to go, so just take the last question. So, Fumilayo said, what is the biggest risk an investor in this product should be aware of? And what measures are in place to protect investors against that risk?
Please,
what is the biggest risk? What is the biggest risk an investor in this product should be aware of? And what measures are in place to protect investors against that risk?
Did you say what's the biggest risk investors in this product?
Yes, yes, but I don't know the products.
Which products exactly? So I don't know the products.
Yes.
So it's difficult.
We can maybe familiar meant money markets or high yield. We know you mentioned high yield and mentioned money markets.
Okay, so whatever the products you are looking at, whether you are looking at the equities market, whether you are looking at money markets, whether you are looking at mutual funds, whether you are looking at federal government bonds, or you are looking at real estate, the biggest risk that you need to look out for, if you have in the fixed income space, if you have investment in the fixed income space, whether it's T-bills or federal government bonds, the biggest risk you should be looking out for is when is the CBN going to cut rates? If the CBN cut rates and you have put your money, so you need to know when, that's one question that you need to be asking. And I think that was presented on the slide or during the presentation when we were talking about. Then for equities market, the biggest risk again that you will be talking about is what is happening to inflation, what is happening to corporate earnings, what is happening to exchange rates, what is happening to system liquidity. These are key issues that you need to, if anything happens to inflation, exchange rate, system liquidity, these are going to affect corporate earnings. And these high earnings that we are seeing for many of these companies may begin to turn negative, and that is going to affect equities markets. So again, for real estate, it has a risk. So depending on the market that you are playing, each market or each market has its own risk that you need to check out for. And that's why we said that the next phase of winners in the coming months, whether it is individual investors or corporate organization, are those who have full understanding of the market. These are going to be the next generation of winners that we're going to see. So having that understanding depends on the type of market that you're placing your fund. That will guide you. Thank you.
Okay, thank you, Doc. Just one last question. There's this important question we need to ask. So Mr. TA asks, what role will investment houses and other capital market players like SAMTO play in driving the $1 trillion economic mandate by the presidency? Let me go again. What role will investment houses and other capital market players like SAMTO play in driving the $1 trillion economic mandate by the presidency?
Okay. So because you are referring to SAMTO, maybe I should just speak from SAMTO's perspective. So basically, of course, again, during the presentation, you will see how we try to link the economy with the markets. That role can also happen vice versa. The market can also drive the economy, in which case the market can also help to drive that $1 trillion economy that the president is talking about. And what happens? Assets, companies make profits, asset price appreciates, and that brings about, increased economic activities and all that. But what role can we play? The role that we can play is two things that, like we have said. The first is to make us understand the purpose of your investment so that you are able to know that once you put your money in an investment, your investment can grow. The second is to know that the duration of your investment is key. So you are not just withdrawing, you are not just putting your money within a short while and you are coming to withdraw it within a short while. So the tenor of your investment is also very key. So first, like we said, encourage that level of investment, because traditionally, that first level of savings, because savings will traditionally bring about increased investment. So once you save, you invest, and the economy can grow. So that's the role. And that role that we play in terms of financial advisory is to make you understand that you need to save, is to also make you understand that your savings can be invested. And it's also let you know that through your investment, your wealth can increase, because as you are investing, your investment, the value of your investment increase depending on your rates and the agreement that you've had with your relationship officers and all that. The investment can increase, and all those can help in driving the level of financial system, the level of financial flow in the economy, and driving the economy at large. Thank you.
Thank you so much, Dr. Patrick. It has been very, very interesting. Thank you. So this brings us to the end of this very interesting section, informing us how to drive our Nigerian financial market over the coming months and how to make sound investment decisions. Once again, thank you very much, Dr. Patrick, for your time and resources and for breaking this down for all of us to understand. We appreciate you. My heartfelt gratitude goes to you, the audience. This session wouldn't have been successful without your presence, support, interactions, questions. We really appreciate you throughout this section. We are hoping that this is not goodbye. We are looking forward to hearing from you regarding suitable investment options, opportunities, or what SAMTO and all our subsidiaries can do for and with you. Don't forget to grow your wealth with SAMTO. Thank you so much for being here. We appreciate you. Please have a nice day. Thank you so much. Thank you.
Thank you so much. So
Àmì ti wẹ̀ láàárọ̀ yìí.
Oh, end events. Right.